What does exactly mean reversion for the audience out there? So when they look at the charts or their stats, what does mean reversion mean to them?
Well, the simplest idea of mean reversion is martingale or grid strategies. The idea that without having any insight into price, if you take an incrementally bigger position, hoping that you don't run out of bankroll, that at some point in time there will be a revision in price, in the opposite direction, the extent to which you will recover your money plus some incremental gain. And so thousands and thousands and thousands of people who start in this space, whether they're playing on C-Trader or on MT4, will start with some grid strategy. They'll start with some buy-sell strategy where you make a buy and a sell and double your cost of transaction because you think that there is a novel idea that hasn't been considered already, and an opportunity to participate without what's the appropriate without the idea that that price doesn't have an impact on your ability to extract small incremental alpha out of the market. So that's mean reversion. Mean reversion is like at some point price will return to its normal. And so
the first time I learned about martingale was in my first year of university. We lived in a town that we went to university in a town that had a casino right across the border from Detroit, from Canada, and everyone's getting their checks from the government to pay for their school, and they're like, well, let's go to the casino first. And the guy's like, I got this amazing strategy. He's like, I go to the roulette table. I put 25 down on red. He's like, if I lose, I put 50 down on red. If I lose again, I put 100 down on red. And if I lose, I put
yeah, it's your standard +1,
Yeah, he's like, it shouldn't hit, more than 6 or 7 red blacks in a row before I get my red. I was like, oh man. Saw a few people leave university after the first week after that.
But interestingly, though, there are some mean reversion strategies, like high frequency mean reversion strategies can work, because you never put you never put the last trade, the full value trade at risk. So you have an opportunity to participate thousands and thousands of times for tiny and small outcomes, as long as each of the instances of the algorithm are sufficiently different from every other one. I hope that makes sense. Like there is a way to, and I'm not talking about martingale here. I'm not talking about your 1, 2, 4, 8, 16 +1 outcome. I'm talking about like a grid strategy that is conscious of price using fundamental overlay, so a knowledge and understanding in a fundamental way of price, and all of the technical analysis that would support it. But the idea that you can participate thousands and thousands of times without ever exposing substantial capital. So there are lots of ways to spin it. It's not to say that they can't work; they can work, but just the kind of raw eight hands of blackjack to get $25 back. Those are the ones that don't work. But it's always a great place for people to start, But again, I guess we're not here to talk about like underlying trading strategies. We're here to talk about how to connect with real money,